Well, we are focused on Apple, though, because of all the talk we've done about the mega caps and the AI trade, this, that, and the other thing. Joe, Apple's 6-month performance is a nothing burger. It's up 1.5%. I don't expect anything to happen at the shareholders meeting today to be any catalyst for that. What's wrong with this stock?
I think what we need is in June at the WWDC to hear about the AI innovation. And you had a little bit of a glimpse into it yesterday. And why is it so particularly relevant? Because in the last 6 months, the perception of the marketplace is that Apple is not innovating quickly enough in that direction and certainly has not laid out what the strategy and the plan is for AI. If you think back to 2014, okay, go back to 2014. In May of 2014, we began to hear the rumors that Apple was finally going to deliver something similar to the Android in terms of the size of the iPhone increasing. So what did we get? In September, you had the announcement where you had the iPhone 6 Plus, 5.5 inches. That was the most successful iPhone ever to sell. And I will tell you this, at WWDC in June, if Apple is able to confidently communicate to its investor base how we're going to incorporate AI into the iPhone 16 will sell beyond the iPhone 6 Plus, and it will be the most significant innovation that Apple has introduced, and it will absolutely restart the momentum in the stock.
Okay, but you're telling Kerry, who also owns the stock, a stock that's been, dead money for the last 6 months is going to be dead money until the summer?
In June, that's the earliest that you're going to be able to get that information from Apple if they're going to be able to deliver on incorporating AI into the iPhone 16.
Yeah, well, June isn't that long from here, but I would say,
if you've waited 6 months, why not wait 9?
Okay, well, for now it's 3. But basically, we've had a year for Apple. It was a very good stock last year. It's the largest cap. We're underweight the name. It is not.
It was the largest cap. Now it's not.
Correct.
Microsoft
It
is,
was,
right? That speaks to what we're talking about.
And that's about AI.
Right? Whoever thought that was going to happen? Did you ever think that was going to happen?
I did. I mean, I think it's not.
You thought that Microsoft was going to get a larger market cap than Apple?
I think. Why not?
A lot of people did.
It used to have a larger market cap, and then it lost it, and now it got, well, but things change. And with the change is the AI train, and Apple has not been as much on that caboose line as other companies in that top tier. And what we're seeing right now clearly is that the 4 that are, which is NVIDIA, Microsoft, Amazon, and Meta, have moved the market so far this year. They represent 50% of the gain in the S&P. We've got a chart to show that. And you see the concentration of the S&P is that these names, and of course NVIDIA is now 30% of the S&P gains, have really driven it. Apple is not there yet. Does that mean it won't be? It might be. They have to prove that they can do something that's innovative. Right now, it's a 30 multiple stock with high single-digit earning growth.
Well, I'll tell you what, we used to say, Jenny, that this dispels one thing. We used to say, well, as Apple goes, so goes the market. We are proving ourselves now that not only can the market go up, the NASDAQ can approach an all-time high without participation from what was once the largest stock in the market. That was debated. That was questioned. That was doubted for a good period of time.
Right, and it's because leadership changes. So Apple's been flat for 3 years. And it's funny, I was thinking the other day, so I've been on the show for about 5.5 years. For the first 2 years, it was all Tesla, right? Then it was all Apple. And then Apple's really been fading in favor of like all NVIDIA. But the point of that is we've seen leadership change. And we've seen it change quite dramatically even over the last 5 years. So Kerry was saying just now that their earnings growth is expected to be about 7%. And so, Scott, when you say what's wrong with this stock, I think it's a really easy answer. What's wrong with the stock is that over the past 3 years, the CAGR of revenue growth has been 2%, and the CAGR of earnings growth has been 5%. And with a 27 times multiple, that is simply not good enough. And so, Joe, I think you're wrong. I don't think that it needs to be them saying like, oh, we're going to put AI in the next iPhone. I think they need to say, we need to put AI in the next iPhone. And very specifically, we expect sales to be, whatever the numbers are.
The sales will come.
You know what? I don't think you're right. I don't think they'll come in a significant enough way to justify the 27 times multiple.
That's the thing.
And so
we're talking about sales are of course, they're going to be strong because they have such a strong base, installed base, word I was thinking of, installed base. But, at Jenny's point, at 27 times, good is not good enough.
No, the sales have to be historic, and I believe they could be.
But here's the thing. Right now, analysts are expecting 7% earnings growth for the year ahead. That's entirely driven by share buyback, right? So even right now, there's just nothing in there that's compelling. So I don't even know, Joe, how they would get.
That's a little bit over the top from somebody who doesn't own the stock. I mean, you can justify why you don't own the stock. Well, I mean, but that's insinuating that, by not owning it for the past, 5 years, you've done just great. Now, Apple has done just fine. Okay,
but we've owned Meta.
Apple's done just fine.
We've owned United. Over the past 3 years, Apple's done nothing. 3 years ago, I'm exaggerating. 2.5 years ago, October 2021, Apple was trading at $180.
You're talking about Apple stock as if it's some big dog in the market for years.
You said it. It's a nothing hamburger.
But I think
6 months, it hasn't done anything.
I think we're
6 months, not 6 years.
We're dismissing the potential.
No, for 2.5 years, it's done nothing.
Okay, but you're looking in the past, and I agree with you. It's done nothing. I understand that.
Too, to where
but look forward and see.
7% earnings growth driven by share buybacks. Can't you do better?
Yesterday was a very significant announcement. And for people to believe that Apple has not been working on incorporating artificial intelligence into the iPhone, that premise is just so misguided. Now they're pushing all their chips in one direction and acknowledging the potential opportunity. If you're able to incorporate artificial intelligence into these phones, which we're all using, this is the most valuable thing in essence that we're carrying around with us.
That's obviously
that will be a historic moment.
Hold
on. Scott.
Hold on. Yeah, Weiss, please. I was trying to come to you anyway.
Yeah, well, thanks for coming to me to be the voice of reason and settle this debate.
Hey, wait.
Look, Apple is just it's a tired stock. I mean, it has always lagged innovation, and I know you've picked on me for that before, but it's true. They've been, in the post-Steve Jobs era, they've been a follower instead of a leader, and the market is just not willing to pay for that anymore. So I do think the multiple compresses. The growth hasn't been there for years. So you keep waiting for a phone refresh cycle, and those refresh cycles have been more and more disappointing because all they've done is increase the zoom feature on the camera. And Joe talks about AI. Well, I've asked, what is the business use case? What's the use case for AI in the phone? And is it going to be them leading or following? I suspect it's going to be them following again. So right now, we don't even know what the use cases are for AI other than at the highest level, other than searching for, for books or answers to questions in, with Microsoft, with ChatGPT. So what I'd say is nobody was focused on the car. It's been 10 years in the making, and it shows to me that the Apple brand has atrophied a little bit. And I know it's going to be controversial because if you go back 15 years ago, every auto company would have been jumping in to say, let us white label a car for you because you're so powerful. But they've been unable to get anybody to do it. Keep in mind, they're not a capital-intensive company. They push all their manufacturing out to somebody else, whether Foxconn, whatever. And that's a great model, being asset light. But they couldn't find anybody to assume that CapEx burden.